All right, let's get this party started, ladies and gentlemen. Okay. Roll up, get yourselves comfortable. As I speak, the Nasdaq is trying to break a 3-day high. Trying being the operative word. A little range break fake, didn't we, last week? Let's see if it will follow through. Will they have that positioned at the highs just before the election? Let's see. Today, we're going to talk about the election. But before we get started, let's have a quick scan, let everyone get settled in. Tonight, we have a lot of goodies going on. We've got a lot of earnings on the card at the moment, haven't we? In fact, it's a jam-packed weeks full of headline risk. Yeah, got lots of stuff coming out tonight. We've got lots of we've got non-farm payrolls. We've got budget. We've got the election. We've just got so much stuff. We've got big guns reporting. Earnings season in full swing. One eye on the election. One eye on inflation is headline, headline, headline. But what I'm going to try to do today is really look at things from a trader's perspective, right? Because there are loads of people out there who, I say loads, that's not quite true. There are people out there who are, very good at kind of analyzing things, very good at understanding the logical consequences, very good at the macro stuff, very good at things that just not, I'm just not my, it's not my thing, right? But I'm a trader, and my job is to, and your job too, is to try to decipher how we can capitalize on this opportunity that's coming up. Now, you may not want to be involved trading as the results come through. I understand that people are busy, people have got other stuff going on, but this is going to drive the markets probably until the end of the year now. The election, the way that the policies are dismantled, the new announcements, how the Fed respond. It's just going to drive stuff now until the end of the year. So regardless of how you want to trade this or not, or if you want to trade this or not, I think it's valuable. And actually, interestingly, let me just make sure we've got everyone rolling here. Interestingly, you know what? This is the least popular webinar I think I've done. Well, time will tell, right? Time will tell. But to me, this is where this is moving. This is the beating heart of how prices move, right? It's headlines, fundamentals that then drive stuff that we can then look at the technicals to take a trade from. We can't deny the fact that the fundamental policies and inflation, all this other stuff, COVID, all this stuff that actually shifts things does have an effect on the markets. But our job is then to time that with technicals and maybe into candlesticks, into chart patterns, use indicators, whatever. But ultimately, markets will go from A to B based on fundamentals, but how they get there is probably more attuned to price action, supply and demand imbalances, little bits of news flow in between. And our job is to kind of decipher this along the way. So this is arguably the biggest opportunity we have as traders, that we will have as traders, when we have this reprice scenario where assets can be repriced in an instant. People are going to be shifting money around. And even if you're not trading, so I'll get onto the moment, and I'm kind of going off piece here a little bit, but even if you're not trading the election, if you choose not to trade it, I think that seeing how it affects the underlying markets that you trade day to day is super important. So I'm going to cover lots of stuff today, and hopefully my aim is at the end of it, you will go away with a kind of game plan on how to trade things. Before I get too deep into stuff, let me please just remind you that, ladies and gents, risky business trading is risky business. Spread betting, CFDs, you're trading on margin, you're trading on leverage. That's a double-edged sword. Goes well, it's great because you just really amplify your gains. It goes wrong, it's not so good because your losses are amplified too. So just understand that when you're trading that, that's the pros and the cons that come with it. There's no free lunch here. But our job as traders is to try to minimize that downside. And we use kind of risk management tools to do that and try to maximize the upside. And we use leverage to our advantage. That's what we're trying to do. But understand, if you're new to the game, things can happen. There's risk out there that sometimes you may not have considered. Often it comes from our own minds as well. We're taking trades we shouldn't have, or oversizing, going on tilt, that type of stuff. Plus, there's all sorts of other risks as well. Just understand the game that we are playing, or the call it a game. It kind of is a game, right? Because it's ever-ending puzzle. It's a four-dimensional puzzle. There's so many different participants. The picture changes all the time. You get different pieces. Someone shuffles all the pieces, and it feels like a little bit of a game to me. And the rules are they're very standard. You kind of have to try to protect your capital and grow at the same time. You have to try to spot repeatable trading opportunities, and you have to stay in the business for as long as you possibly can, because that builds your experience and it builds your confidence and all the other stuff that comes with it. So anyway, that being said, let's move on. So trading this US 2024 election. Welcome, ladies and gentlemen. Okay, the future of this republic is in the hands of the American voter. Great quote. And this is happening in a few days' time, well, 1 week's time to be precise, Tuesday, the 5th of November. So, just a quick reminder here. I guess it's not so pertinent with this webinar as such, but I don't have all the answers. I don't pretend to have all the answers. I'm not one of these guys who stands up and says, I know everything. I absolutely don't. And I think that's probably why the market has been kind to me over the years. I think I'm quite good at putting my ego to one side. It wasn't always that way, I have to say, but put it to one side and say, hey, I don't pretend to know everything, but I'm kind of good at this little area, and I want to share the bits with you. So I'm going to share the key ideas and thoughts. I bring ideas in from others and share those and give credit to those people as well. And I try and collate stuff as well. Do that every day in my daily email. I'm there. I can observe. I get to observe traders who are developing, who have come from struggling to good. So I can see kind of different people at different areas in their trading journey, and I kind of share stuff that I believe will help you as a trader, wherever you are in your trading journey. Always do your analysis. Always do your research and homework. And I guess tonight, when we're going to talk about tickers and we're going to talk about ideas and maybe some kind of market conditions, I'm not here to share trade ideas. That's not my thing. And I certainly am not qualified to do that. Wouldn't want you to do that. But I'm here to just kind of highlight markets that could be of interest to you and give you some different ideas on what could happen, how they could move. And then you go away, do your own research, homework, analysis. We'll get to that kind of routine towards the end, and you decide your own game plan, because it's your money, it's your trading, you make your decisions. Never take advice from anybody else. Never go trade on a tip or someone's theme or idea or how bullish or bearish they are. That's just a recipe for disaster. Make your own mind up. By all means, take all this information in, but then make your own mind up. And it's not quite relevant for today, but if you want to change anything, making adjustments, just why I say this every week is I see traders flicking around doing one thing, this thing, that thing, never going anywhere. If you're going to make a change and adjustment, make it, stick with it for a while, audit your progress and performance, and then decide if you want to carry on or make some course corrections. And our focus today is to explore trading opportunities, planning our trading approach, and getting as prepared as possible. As I just want to reiterate, this is not trading advice. I'm not suggesting you'd go long or short any of these things. It's for you to decide. But I'm just going to share with you my process and how I'm preparing for the election. And actually, I'm doing this in my daily email series. I know many of you are subscribed to that if you go to Traders Mastermind. I send a daily email out every day, and it's election focused at the moment. I'm sharing kind of some of the research I've done into prior price action, this type of stuff. I share a lot of that with you tonight, but as we get closer, we'll get into more detail with that. And also, there is another webinar that I have planned a week today, as we are on the election day. We're looking at the charts kind of live, seeing what's moved, what's maybe priced in, what could we look at. And that will be an opportunity as well for you to present maybe or share some ideas that you've got, what you want to focus on, things you think might happen, how you might want to position, how you want to play it, what are you looking at, sector, stock, whatever. So hopefully nice interactive webinar. That will be next week as well. So let's get prepared now. Let's do as much prep as possible. And even if you are not planning on trading the event, this is going to shape how the markets respond, as I say, I think to the end of the year, if not more, right? So there's three main focus areas. One is leading up to the event, opinion polls, betting markets, etc. During the account, so the swing states are important to look at. We'll look at those in a moment. The shifts in sentiment, and then after the dust has settled, the true move, if you like. And it might take a while for things to come out. It often does, but there's going to be results come out throughout the evening, and there's going to be different reactions from different markets. And you're just watching how markets respond to certain things is going to be where the opportunity is, I believe. More on that in a moment, but let's focus on 2 and 3 today. So I think leading up to the event, fine, we are a week away now. If you'd positioned already, you're probably just sitting with your position and seeing what happens. But one thing I want to say is, before we kind of move on, is, I consider trading to be an entrepreneurial venture. We're all entrepreneurs here. And maybe you run a business as well as trading, or you're familiar with business. But the job of a business owner or entrepreneur is to kind of take lots of things, put them together and add value. So, if you're a builder, you're building a house, the sum of the labor, the materials, the costs, all of the costs you've got involved, the architect, the land, etc. Um, the sum of how much it costs you to build a house with all that and the time and everything is less than the value of the house, and there's your profit. If you're making brewing beer, for example, then the sum of all materials, all the ingredients, the labor is less than the price that you pay for it. You get the idea. And as traders, kind of that's our objective, right? And if you think of a business owner, they take experienced people and they use those experienced people to help them run the business. So as traders, I think we do the same. We have tools and software. So we use a charting package like TradingView. Use a broker, of course, who charge you for the service. So Pepperstone charge every time you take a trade, take a sliver. That's their business, but we need that service. And then there's people out there who are very, very experienced and have a lot of insight into this type of stuff we're going to cover today. In other words, they will say, oh, well, Trump is going to be very good for X, Y, Z, or very bad for X, Y, Z, or Harris is going to be very good for this, this, and this. And they're experts, and I consider those experts, and that's fine. But our job is to take that narrative and that suggestion and that expected move and expected kind of positioning and go, okay, fine. You are the experts. We're not the macro experts here. You're the guys who understand all this. How can we take that as traders and use it to our advantage? It's not always going to be, well, I'm just going to take that trade because that's what everyone thinks. It's going to be sometimes they're very different. And today we're going to cover lots of this type of stuff where you might have heard Trump is good for this, Harris is good for this, is what's going to happen. These gets in. If it's a red sweep, it's going to be this, that, the other. And that's great because logically that makes sense. But I've traded enough elections to know that that very rarely is the outcome. I remember trading the first Trump election, and the first Trump election, everyone thought that Trump getting in was going to be bad for the economy. They thought he was gun ho, he was going to do this and do that, and everyone was scared about him getting in. And that was the general feeling as you went into it. And then as it kind of started to realize that he was going to win, the stock market kind of went lower heavily. But then everyone sort of went, hang on a second, for whatever reason, who knows what's going on here? Not for us to overthink things. It then started to rally off lows and did a kind of rally right the way up until early hours of the morning UK time. All okay across the US time as well. So I've seen lots of things happen that are unexpected. I've seen lots of price do things that doesn't really make sense, but the media will change the narrative to suit. So just know that if you are looking at trading elections, whether you're trading the election as it comes through and the results come through or after the event, just be aware that price is king. And maybe like theoretically what's going to happen. And these guys are smart, right? Some real smart guys out there telling us this stuff. And, I take that information in, but there's a big caveat of like, well, price has got to, and the way we use that as a formula, and maybe I'm jumping ahead of myself a bit, but I really want to reiterate this because even if you kind of go off and you're halfway through this now, you think, oh, well, if you know what the expected move is, what the masses believe, you can then watch the price response when X happens or Y happens. Look at your notes that says this should happen, this should happen, this should happen, and when it doesn't or it does, you can then position accordingly, or not position as you see fit. I think knowing that is such an important part of being a trader. I always called it unexpected response or expected response. So how does the market react to good news? If the market sells off on good news, you get a good glimpse into what's happening and who's driving and who's in control of that supply demand. So just be aware of that. And it's slightly harder and tougher in election perspective because there's so many permutations of what could happen, this, that, and the other. But just have that in your mind that price is king, right? Price rules all, and looking at it through the lens of, okay, I'm a price action trader. I'm looking to capitalize on opportunities, but I'm also aware of what the people with larger investments or higher time frame money, if you like, are thinking and how they may be positioning, and maybe if they're trapped or maybe if they're flipping their sentiment. I know it sounds complicated, but I really wanted you to think that we want to really be open-minded as we go into trading this to let price rule our decisions. And I think that's probably runs true throughout everything. Okay, so here's a plan. We need to decide which markets will offer the most opportunity. Number one, work out how we expect those markets to react on the different scenarios. That's what I talked about there. The experts and the people who are really in the thick of this type of stuff. Observe the election results and price response. Trade according to the risk plan. So number three and four is key, right? Observing their election results and watching the price response. Does price respond as expected? Is it unexpected? Is there an opportunity there? Are a lot of people trapped because suddenly the expected has flipped? It's unexpected. And now we've flipped to a Harris win rather than Trump, whatever it might be. So trade according to the risk plan. Okay, so theoretically, which markets are likely to move the most? So people say that if Trump wins, and it's not quite as clear cut as Trump winning and Harris winning, we've got different things we'll talk about in a moment. So generally speaking, I just want to kind of get a broad overview on this. Trump win is going to be good for, supposedly good for crypto, so Bitcoin, coin, MSTR, those individual stocks, fossil fuels, defense stocks, Lockheed Martin. You've got general stock market bullishness because of the deregulation and capital gains tax, and Trump media, DJT. So that's the narrative we're hearing from the media, right? You might be fed up with it now. You're like, oh, we'll talk about his elections, but it's important for us to know that as traders. Doesn't mean we're going to blindly act on that, but it's important for us to know that this is the kind of theme that's being presented to us and what people are genuinely believing. Yeah, defense stocks, fine, it makes sense. Fossil fuels, ExxonMobil, it makes sense, right? It does make sense. Like, or some of the oil companies, Trump likes oil, he likes defense, he likes military spending, he likes deregulation. He talks about that a lot. He's going to reduce taxes. These are all good things for the market in theory, right? Now, just a reminder here, we're not care about our political opinions or putting to one side. We're here to make money. We're not here. We're interested to, put our opinions on stuff. The other narrative that's coming out is that, hey, Trump will end up, hiking up. We'll have a lot more borrowing. The deficit will rise. All this type of stuff. So it's not as clear cut. But this is the general consensus that we're having now. Harris win tends to be considered bullish for clean and green energy, Tesla, First Solar, Plug, China and Mexico, because the tariffs that are potentially going to be levied on these countries by Trump, they'll breathe a sigh of relief if we get a Harris win, Democrat win. So China and Mexico will be bullish, and you can kind of express those as some of the currency pairs we'll look at in a moment. Other currencies like euro, pound tend to be, considered to be bullish because Harris administration will be kinder when they're doing negotiations with trade, post-Brexit negotiations, etc. Healthcare like Abbott, Teladoc, Pfizer, Tilray, maybe the cannabis company. Are they going to be more bullish? Possibly. So, right, we've got a kind of framework here, and I just want to kind of set the scene a little bit before we dig into some of the nuances. First of all, I know a lot of you guys trade Nasdaq, right? And I like to trade the Nasdaq as well. It's one of my preferred instruments. But let's talk about Elon and tech for a moment. This is not quite as clear cut. Because on one hand, we've got the lower regulation, lower tax environment, which supports any company. However, the Republicans are pretty upset with this censorship, right? The handling of big data, free speech, etc. So I don't think this is quite as clear cut. Some people think it is, but I don't think it is. The higher tax regime is obviously going to hurt technology, but how is price going to react? And the final thing here is just think about Elon Musk. So Elon Musk, theoretically, his company Tesla should be very positive for a Democrat win, right? Perhaps negative for a Republican win. Why? Because you think the Republican or Donald Trump specifically is much more of a fan of fossil fuels, less so green energy, electric cars, not much so much of a fan. However, Elon Musk has been banging the drum and cheerleading Donald Trump for a long period of time, all throughout this election. And so will there be some kind of incentive or some kind of thank you, or I was going to phrase this. You get the idea, right? He will have helped him get into the White House if Donald Trump gets in. And so perhaps this is Elon being smart and thinking, oh, maybe I'm hedging my bets here a little bit. I don't know. Maybe he genuinely thinks that he wants to see Republicans getting in free speech, etc. Fine. But it's going to be interesting to see how, what happens with Tesla and stuff. So tech's a little bit of a tricky one. But a win also might not be a win because we've got a Republican sweep, we've got a split Congress with Trump in the White House, we've got Harris winning with a split Congress, we've got Democratic sweep, Democrat sweep. Now, I consider this the way I look at this is a strength of win. Now, you can go on the betting markets, and I think Pepperstone have been doing some very good analysis on kind of watching how that betting market has changed and how people are positioning. Because one thing to consider is what's already priced in. Is something priced in? Is I think last time I checked, it's probably a Trump split Congress priced in. I might be wrong on this, but I think that's where it's leaning. Now, does that mean that if things shift in the middle, during the election night, things are going to move wildly? Probably. If we suddenly look like Democrats are going to get a big clean sweep, then that's going to move things hugely, and then it swings back to a Republican sweep. This is why watching the swing states is so important. But I consider this a strength of win, right? And why I'm kind of simplifying this is okay. If it's one Republican sweep, then the things that are supposedly bullish for a Republican Trump win, oil, fossil fuels, etc., should be even more bullish. Right? And if it's a split Congress, means they can't put through this so aggressive policies, then it's still bullish for those things, but not so much. Same with Democrat win, a Democrat sweep, which I think is the least likely scenario at the moment, and a Harris kind of split Congress. And again, I don't want to get into the weeds. I don't want to get too much into this stuff because people are covering this with much more efficacy and detail than I. But we need to look at it as traders. We need to look at traders. I thought about, should I put this in or not, because it's being covered, but we need to know it because as we go to the next few slides, we start to build our game plan. We need to understand what people are thinking. We can't just say, I'm going to buy this at this level and that at this level. No, no, no. The market is being fueled by a very different fuel at election day. It's a fear, it's greed, it's positioning. It's everyone is watching this. Everybody who is anybody who is a fund, is a money manager, will be watching this and potentially positioning for it or taking chips off the table. Okay, so the one more option we've got, which I don't think is such an unlikely event as people are saying, is an uncertified electoral college result. In other words, it's completely contested. We had this with, was it Al Gore? I don't remember, one election. I've written an email about this, so I should remember. I literally wrote this the other day, and I was kind of analyzing this, and it took ages for it to resolve, and the market did not like it. So if there is any kind of legal battle, any kind of unverified, it's just the result isn't verified. Like, hey, that's not true. We need something else needs to be done. We need a recount. It's been challenged. There's been accusations of fraud or whatever it might be. That is going to be the outlier event that I believe could be pretty bearish because there's no one at the helm. Things aren't getting done. That's a worrying time. And the markets, regardless of what you think about politics or what you think about the positives and the negatives of red and blue, the markets just care about certainty. Like they don't. Yes, there's certain nuances and stuff. They obviously the markets generally like lower deregulation and lower taxes and that kind of stuff, which are going to impact, boost the dollar, boost the equities. But if no one's, look, they'll get over it. Like if it's a Democrat win and it's high, they'll get over it, right? It will eventually work itself out in the wash. However, from a short-term perspective, if there's any ambiguity, any doubt, any challenges, I think that's where we could have the outlier event of it being very bearish because a lot of money managers, a lot of people with capital, I believe, will want to de-risk that. And they will say, we don't know what's happening. How long could this be drawn out for? We need to take some risk off the table. At the very least, I don't think people will be committing risk. I think if this happens, a lot of people will say, oh, we need to wait until we know what's happening, who's in charge here, where we're headed, before we commit any cash or you put any cash to work. That's what I think would happen. Now, who knows what happened again? Price is king, but this is the outlier event I think is not being talked about enough. And I think it's something to watch out for. Me personally, I'm putting a plan together to how will I respond for this? As it starts to become clear that this is, uncertified. We don't know what's happening. There's uncertainty, all this kind of stuff, worry. Do I want to position short? Do I want to kind of wait for that to resolve itself and then position long? Don't want to kind of jump on short momentum. I'm starting to think through that. That's the sort of thing that you should do as a trader, whether you're trading on the night, whether you're trading afterwards. Like, how do I want to position for these different scenarios? And you have to go crazy because there are many permutations. You want to go, well, if the Senate is won by this and that and the other, and I want to trade this, just broad scenarios because I do believe you can over prepare and you come in there thinking, I've got all these things laid out, and you kind of want to feel what's happening with price. You want to see and feel it, watch it, use your price action skills, use your ability to read supply demand shifts because they will be big. But one of the things I think is to watch out for is this kind of unknown because without I think without exception, any unknown is fear. You think about, you go back to the COVID, it was unknown. The world was going to end. No one knew what was happening, right? And then as it kind of became known, it was like, okay, we know it's this. This is the impact it's got. It's roughly going to do this, etc. Blah, blah, blah. Then everyone was buying the dip. Everyone was loading the boat. And it's the same when the previous election, which was uh, unratified, I think is the correct thing. Um, yeah. Okay. So just be aware of that. Be aware of that. Okay. So what to watch? So on the night, I'm going to be watching this. And actually, elections have been. I've done pretty well over elections, and I said that jokingly the other night. I thought that this will be the first election I do. Brexit was, good to me. Trading that result. The UK election was a waste of time because it was already a dead cert that Labour were getting in, so nothing really happened. But this is 50-50. This is almost 50-50, a margin of error, as people call it. It's 50-50. So who knows what's going to happen? And the swing states are going to hold the key to the White House. I will be watching it and being prepared to trade it. More on that in a moment, but watch how sentiment shifts on the kind of run up. I think we're kind of almost there now. We're seeing it shift towards Trump. We're seeing that happen now. If something drastic happens, it swings back the other way. How do the markets react? We'll tell you a little bit about, and that's normally a bit of a key actually. How markets are responding as the favorite starts to shine through. So as we start to see, um, we started to see slight Trump bias, slight prediction that Trump would win this on certain pollings, etc. By the way, does anyone know anyone who's been polled? I was listening to the Joe Rogan podcast with Trump, and I thought he said, "I don't know anyone's been polled," and I thought, "I don't know anyone's ever been polled either." I don't know anyone who knows anyone who's ever been polled. Anyway, he was on a different rant there, but yeah, the polls, all this type of stuff. So pay attention to on the evening, the results of these swing states on the night. I'm going to give you a list of those in a moment. But that's how the market, watching. This is where we get smart as traders. Listen, this is important. As we start to see the swing states that are important, note those down. And then as we start to see the results of those, you might not see them on the night, you might see them coming through, whatever, but you may do. You might start to see some stuff coming through. And actually, if you go back and study the previous elections price action, which I'm going to share with you in tomorrow's email, you will see about 7 p.m. we start to see movement. So stuff starts to happen then. Anyway, as we start to see some of the results coming through, you want to see the price response to those results. Is it expected response? So imagine comes through, Trump starts to become winning these swing states or winning states by a much larger margin than expected. That starts to swing the odds of a Trump victory or clean sweep more in his favor. And it could be the other way around, but I'm just using Trump as an example. Could be the other way, of course. You then want to watch how price responds to that. Does dollar rally? Do the equities rally? What actually happens? Because if you don't see that aggressive rally as it starts to become clear that Trump might be the winner, as it becomes more likely to start to win more and by more margin, you need to think. And by the way, I don't know this is going to happen. No one knows, but you need to think. Hang on, the response isn't as expected. Is this a sell the news environment, or are we rallying? Great, I need to wait for a pullback to get long. You have to think about, hey, what's going on? And nobody knows. I don't think I'm not predicting a sell the news event. I think probably we will pick up and start to kind of get a bit. I think the uncertainty is holding stuff back. And generally speaking, we kind of always do a bit of a head fake and then get a bit of a bid. But who knows? We'll see what happens on the night. So the magnitude of the victory is important. Looking as the results come through, is it more than expected? Because that tends to give you an indication as to how the country is leaning. But this is great because as traders, sometimes we get this leaning one way. And maybe, let's say all of a sudden, get states that were blue coming much more blue than expected. You're like, well, hang on a second. And states that are, Republican wins just a little bit less than expected. And everyone's like, well, hang on a second. Harris could win this. Then watch the market's response. Fine. That's phase one. Phase two is then to see if then it shifts later on in the evening or later on in the days after. All of a sudden, it looks like Trump might be winning. Then there's your trade because your trade is swung one way. A lot of people are kind of trapped in one direction, and you're then trading the trade the other direction. Which way that might be just depends on what price does in the night. This is the thing, no one really knows, right? We've got these theories and stuff, which is great, and maybe the actual textbook stuff does happen. Fine, you can position for that. Watch the price go. Yeah, here we go. Trump's coming through. Expected to be good for dollar. Okay, I'm going to do this. I'm going to be picking up USD JPY. I'm going to be buying Russell 2000, whatever it might be, and you go, okay, that looks like the trade, but it might not be. And that's keeping that open mind, I think, is so important as a trader. You're a trader. You're not an economist. You're not an analyst. You're a trader. Your job is to watch price action, watch price response, and respond accordingly, which might be doing nothing. That's fine. But it's to do that. And just remember that. It's not what you want to happen. It's not what you think is going to happen. It's not what the expected move is. It's what price is telling you related to what people's expectations are. That makes sense. Hope that makes sense, you guys. Right. who ultimately controls the House and the Senate is going to be very, very important. So, as I said before, clean sweep for Republicans would be considered more bullish for, say, oil stocks, fossil fuel stocks, than if it was split. You get the idea. Okay, so on the night, results are expected around midnight UK time. The mix of exit polls and real results, which is um, yeah, 7 p.m. That's where we get these moves. And if you look at the previous elections, you'll see 7 p.m. to 9 p.m. often a move in one direction. Exit polls, God, man, who knows about these things? But it swings the market. And just be careful. Please be careful. I'm going to send tomorrow's email. I'm going to send you kind of rundown of this sort of stuff. There has been head fakes galore the previous elections, where it's moved in one direction, looks like that's the initial move, then ripped back the other way. So just be very, very careful about how you trade this if you decide to trade this. Some of these swing states take days to count, so there's plenty of opportunity. If you're not going to trade the evening, and that's fine, then there are days and weeks after will be driven by this. We may not get a clear winner right away. And from a personal perspective, I think there's going to be some shenanigans going on. I think there's going to be some contesting of stuff. We know how brutal this battle is. It's not a friendly battle, is it? It's not like, oh, well, we slightly disagree on this, and actually, may the best person win. It's not like that at all. Which, whatever you believe, however you think of that, but I think there might be, unless it's blatantly obvious who is winning and by whatever margin, I think that either side may well put up the biggest fight possible to disagree and cry foul and all this type of stuff. That's a personal opinion. Will that happen? I don't know. So just be mindful of that. I think we're going to get moves in multiple different directions. I think that there's going to be opportunity. The key for traders is to really pick your spot. Is to really be careful and mindful about where you're going to trade, if you're going to trade in the days after, how you're going to trade it, because that's so, so important. Right. So more on that in a moment. Presidential swing states to watch: Arizona, Georgia, Pennsylvania, Wisconsin, the big ones. And then we've got Michigan, Nevada, North Carolina, and Florida, I believe, are some of the others. And what I mean by swing states, I think this, is that these are the states that actually generally dictate the outcome of the election, because they flipped red to blue very, very often. And the candidates believe that if they can win these states, then these are the states to focus on, because these are the states that are going to swing the election in their favor. This is the nature of the democracy, ladies and gents. We have it down to, sometimes it comes down to the wire. There are states that are firmly blue. There are states that are firmly red. They're never, ever going to change. And so they don't even bother campaigning there. You know how this works. But I just thought I'd highlight some of the things I think are important states to watch. So if you're watching the television, if you're listening to whatever it is, or watching your news feed, and you say, hey, this is what they're saying in Arizona, just know that that's going to move the market, potentially going to move the market. Hey, Pennsylvania, key one. What's that going to do? This is interesting. Maybe you don't watch this, but know that market participants will be watching the swing state results. So there's a good list there to kind of go on. So trade idea on the night. And by the way, this is not really a trade idea as such. I'm not saying go and do this and buy this or sell that, not at all, but a theoretical workshopping through of what might happen and how you might think and how you then might position from a personal perspective. Okay, so trade idea on the night. Number one, imagine you see a swing towards Trump. Republicans, swing state starts going red with big margins, hypothetically speaking. Nobody knows, don't pretend to know, but where'd you look? So now you want to workshop through ideas of, hey, I'm starting to see this. Where am I going to look? What's going to move? And at least focus your energy, because the biggest nemesis we've got for traders, ladies and gents, is getting spread too thin, because everything is going to be shifting. Everything is going to be moving. I don't care what you're watching, it will be moving, right? And your job is to focus your energy on one, two, three, maybe four things, right? Just pick something that go, hey, I'm going to watch that. Now, again, we don't necessarily know direction, but we know the expectations, and then we want to watch price response to that. So we're narrowing our focus. If we're going to do well on this election, we need to be focused. So things that are going to move in that hypothetical scenario that we start to see more of a red clean sweep: Russell, S&P, Dow, Nasdaq, Mexican USD, Mexican, Japanese yen, euro, pound, Chinese currency, all this type of stuff, right? Expectations on a red sweep is dollar strength, others weaker. So you can work it out from that what pair you want to trade, and particular sensitivity to the countries that are going to perhaps be hammered by Trump tariffs, right? So, but bear in mind, these spreads are going to be pretty hefty on some of these other stuff. So that's something to consider. Um, that's going to be in liquidity, the liquidity provider, regardless, right? It's interbank's going to be that. So they're just going to, Pepperstone will pass on what they can. They will try their very best, but it's going to be wider spreads generally because it's a fast market. So how is price reacting? This is where key. So if you think about this, trade idea number one, you start to run through whether it's blue, whether it's red, whether it is, okay, what's the expected response? What does the textbook say should happen? And actually what's happening on my screen? Right? So then you can start to think what's priced in, what's not priced in, and are people thinking differently to the textbook? Are people going, I'm not seeing what I see? Are they changing their mind? This is where our edge comes in, guys. This is the edge. The edge is to watch price response to what's expected. And if it doesn't expected, fine. You go, fine, there's an opportunity here. I want to buy the first pullback. I want to buy a bull flag. It's great. I'm expecting this to carry on for multiple days, multiple hours, whatever you want to do. Fine. You cap your risk, you make your trade, off you go. It doesn't react as expected. What do? Maybe you look for the trap traders trade. Maybe you look for the unexpected response trade. That's the game to play and not be too committed to one particular route. And then the other thing as well is actually Pepperstone are offering 24-hour trading through or planning to, as of now. I did double check with them. They said, yeah, we're planning to offer 24-hour trading on some US stocks throughout the night. And I checked on some of the stocks they're offering. And again, this could change. Who knows? But this so far is what's being planned. The stock market will be closed. So you're going to get access, obviously, to Russell, S&P, NASDAQ, currency pairs, all the stuff that you would normally get 24/5. But they're also offering stocks on things like ExxonMobil, Caterpillar, Alibaba, Intel. So the spreads are probably going to be wider, this. But the reason that I wanted to put this on here is that if you think about a massive clean sweep, say for Trump, that's theoretically good for oil. If you can then maybe capitalize on an opportunity there, getting ahead of the game before the opening bell, maybe trading crude, one of the oil stocks, or maybe positioning against Chinese stocks like Alibaba, or the other way around, maybe it's a clean sweep for Democrats. You get the idea. Just give you another place to look. Now, I want to just remind you, and Pepperstone have asked me when I asked them in the email, hey, I just want to check this before I say it. Are you offering this? We do plan on it, but liquidity will definitely be lower. Spreads will be wider in these things. Margin requirements will be larger. Volatility will be high, right? So if that's not put you off, then nothing will. But if you still think, okay, actually, I can probably get ahead of the curve here. There's a trade I want to put on or express, and I'm prepared for this downside because I think I can get a heads up on or a head start on some of the maybe moves that you might see on the bell. Then fine, it's up to you. So there might be an opportunity to position, but hey, this is there's risk here. But I just wanted to mention that could be something to consider. So alongside your standard stuff that you're watching, your crude, your gold, your Russell, blah blah, there is these opportunities to trade. Now, there's slightly different way to bring it up, and I won't go over it here. If you're interested, go and dig in. They've got it all on their website. But I wanted to highlight that because I think that's interesting. Okay, so the next day play. So we've got the either the election as it's coming through. We kind of start to see who's potentially going to win. Is it going to be contested? Blah blah blah. The next day play is this. So if you look here, very often, you kind of go, okay, what's going to be theoretically bullish and what's the response? So when Trump won the 2016 election, the clean sweep, after we kind of saw that shenanigans overnight, it was dipping, then it rallied. US steel gapped up massively. And then it rallied over that next couple of months, 60%. Like it was a huge, huge move. I know maybe you don't trade steel stocks because I don't think many people do trade steel stocks, but look at the things that might be really, really good to trade. And even if you don't trade them and don't want to swing trade them, you might say, hey, well, this is very, very good and it's responding as expected. So I want to kind of look for buy opportunities if you're an intraday trader or kind of 1 day swing trader or 2 day swing trader, aligned with the trend that is now the reprice scenario that we're seeing on this asset class, because the fundamental valuation of whatever it is, whether it's dollar, whether it's the basket of stocks and index, whether it's a specific stock like this, has changed because the rules of the game have changed. The tariffs are going to be put on the Chinese. They're going to reduce taxes here, blah, blah, whatever it is. So there's, you don't have to be trading the election night. There's multiple ways to trade stuff afterwards, next day plays. And one way to do it as well, I've got a list for you that I'll share with you in a moment of stuff that I want on my watch list. But even just seeing what's moving the most, seeing what's responded the most. And even if you don't trade stocks, seeing what's responded the most as the results start to come in and say, right, Harris won the election, Trump's won the election, what's moved, what's up, what's down, what's the most. Okay, focus on those because you're getting the response and you're getting the attention from other higher time frame traders. Okay, great. Yen's moving a lot. Right. Look to position on that type of thing. Okay, so trade idea on the night. Number two, uncertainty over the result. Again, I just can't. Something just tells me this might be underpriced, but we'll see. USD, JPY lower, indices lower, gold higher. Pretty self-explanatory. But don't forget this can change. So you might have uncertainty and you might have people buying gold. You might have people kind of taking risk off the indices. You might have USD, you might have dollar heading lower, especially against the yen. You might have this happening and then it might shift to be more certain and it might shift the other way. So there's ways to play it. You got to really real chess game this election trading, but just something to consider. So let's imagine, we had the trade idea, theoretical trade idea one. Okay, that's where I'm going to look. That's my eyeballs going to be focused on those asset classes and those stocks and those instruments as I start to see this coming through. Okay, now if I start to see uncertainty, and again, it's me, you make your own up. My eyeballs are going to be, okay, I want to be maybe looking to any positioning short on this. Do I want to be selling the dollar? Do I want to be buying gold? Okay, what's moving the most? Okay, if gold starts to absolutely rip off, that might be the market I want to focus on. If Nasdaq just starts plummeting or Russell plummeting, uncertainty, it looks like it's going to be dragged on. News starts coming out saying they've done this, done that. Maybe I want to start sell a dip, sell a pop, dead cat bounce. Thinking strategically, guys, that's going to get you ahead of the game. And it's going to be the best, I think, the best way to position. In 2000, this was it. It was Bush versus Al Gore. In 2000, this was 1 year before I started trading, actually. So in 2000, Bush versus Al Gore, S&P fell hard over uncertainty. There's a legal battle, numerous recounts. Market kind of sold off over the next 3 days, 7 and a bit percent, before kind of popping back up and it's just sitting around doing not a lot. So uncertainty, the market does not like uncertainty. So what happened last time? Let's talk about last time. November the 3rd to the 4th, 2020. So we had this really close race. There was a lot of volatility. Futures dropped. Then we had, didn't know what was going on. The uncertainty, again, uncertainty. The market doesn't like it. There'll be some point, not necessarily, but there's likely to be, even if there's not massive uncertainty, some point in the night where it's a little bit, oh, what's going to happen? Is there even going to be an outcome? That's when we kind of get the opportunities. But then the clarity starts to emerge, bounce back, and we had a 4% bounce in the Nasdaq. I'm trying to meld those two words together. Here was the kind of move that we saw in the S&P 500 on that day. Big rip. And as I said, this carried on for a long period of time. The trend was less aggressive, right? But after the election, boom, big rally. So you're never too late to get on. You kind of watching the responses, the response as expected. Right. Okay. This was a bit of a whippy one. Fine. But look, this is just a kind of, you can calm down and say, well, listen, I'm going to wait for some support, buy some support. I'm chilled. I'm not going to respond. I'll let everyone else fight with this. You find some support, you buy some support, 2-day move, wait for some support, buy some support, 2-day move, some support. Would you be stopped there? Whatever. You get the idea, right? I'm not here to kind of show you how to do the basics of technical analysis. But the thing is, there's opportunities. Okay, so we had here, this was this is the intraday kind of move, if you like, and I've had to take the futures contract because that's what TradingView went back to. Election day, US Open, bang, range bound. Then we started to see, the results coming out from like Florida, Ohio. Trump looked like he was winning, which kind of calmed down everything of a long drawn out contested election. Great. And then it kind of sold off again as a possibility. This is the opportunities we've got, and I implore you to kind of research and see how stuff behaved. And the next day, the bell opened. We kind of broke out from the high, not too crazy, but uncertainty was coming through over some of the swing states. This is the game we're playing. It's looking for these opportunities. In 2020, when we had the victory for Joe Biden, even US Steel, which is generally kind of considered a bearish response to Biden, later rallied because it started to come out with stuff saying, hey, we've got infrastructure spending, blah, 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 and steel's going to benefit from it. So even, you know, you this is what I kind of trying to iterate at the beginning is that the media will flip it. So if something happens that's unexpected, the media will have another reason for it. So let's say the market suddenly falls through the floor on Trump. They'll immediately they're saying at the moment, hey, we're going to rally, blah blah. They'll say instead of saying, oh well, it's the tax cuts and it's this, they'll say, oh well, it's the deficit, it's warmongering, it's it was priced in, whatever it is. They'll come up with something. So you got to be smart. You got to be smart at this. Okay. Another one here, plug power when Biden got in. This is obviously green energy. Democrats good for green energy. We saw this rally, just a mere 369%. So yeah, these things last for a long, long period of time. Okay, uh, some things to maybe help your workflow a little bit. Build yourself an election watch list. I know many of you use TradingView, so I'm starting to kind of build my watch list up now. US election, I'm calling it, very novel, very smart. Put the indices in, put some of the currency pairs in that I believe are going to be respond the most. Some commodities, Bitcoin a commodity, yeah, poetic license in there. And you can see I screenshotted this the other day, which is why Bitcoin is very different. And some stocks that I think are going to move based on the where they're positioned and the sector they're in. And I've just put a marker on these blue where I think it's bullish if it's a blue sweep or favorable for a Democrat win, and red for a Republican win. And I've done this as well, what I believe with the FX pairs as well. So I think that helps because you kind of now know what you're going to focus on, and hey, what am I going to look at? How am I going to see if the response is expected, etc. So build yourself an election watch list. Very easy to do, as you know, but it keeps you focused on things. Where are we? Okay, so create your own plan. I said this before, but I reiterate this. Which markets are you going to focus on under which conditions? Okay, what do you think is the best possible opportunity? Right? And how much will you risk? And by the way, sometimes that's thinking through some of the things that could happen. So, do we have uncertainty that sells off the market, then certainty that starts to rally the market? Then it comes like it looks like Trump's going to win. Okay, that might be people trapped short. Okay, great. That's a buy for me. So, you start to drop that down. Uncertainty that just gets more and more and more uncertain. Okay, I'm going to sell the first rally. You drop that down, and I'm going to sell it on indices. Okay, you start to think through some of these things. Trump looks like he's winning, then all of a sudden it shifts over to Harris. Okay, great. I'm going to shift over to USD JPY. I'm going to trade it. You start to think through some of the ideas. No, not crazy amounts because we don't know what's going to happen, but being a little bit focused, but flexible. So very focused, should I say, but flexible. That's the best way of approaching it, I believe. Hey, will you even trade the result or will you wait? It's fine just to wait. We saw with all those markets there is stuff going on for days and weeks after. You don't have to be diving in, but be crystal clear on what you want to do. Because what I don't want people to do is say, well, I'll see what happens. I'll just see what happens. And then you come in on the night and you see something, you see a 1 minute chart spiking off, you go, I'll take that, and you get trapped. And you're one of the ones who is the victim of the trap, and everyone who's smart and who's calm and is prepared is taken advantage of. You don't want to be that guy. No, you don't want to be that guy. You want to say, I'm not going to trade it. I'm going to watch it. And maybe you sit there and you kind of watch and you observe, you crack open a beer, you make sure your broker platform's not open, and you watch and observe and you say, hey, I'm going to see what's going to go on. I'm just going to see what's happening. I'm going to watch it for sport, or maybe you don't touch it. That's fine. But make a plan. And you say, hey, you know what? I'm going to trade it if this, and this happens. I'm going to trade the trapped trader setup only, i.e., swing in one direction, rips in the other, fakes off. I'm going to use that as fuel. I'm going to take a 15-minute trade, whatever it might be. I'm going to position. Just start to create your own plan. And one thing I also think is very, very important is to decide your risk allocation. If you're deciding to trade this, recognize that this is about as risk as it gets, guys. It's about as risk as it gets. Headline risk galore, spreads wide, stuff swing around. It's not for everybody, and that's fine. Preserve your capital above all else. But if you do decide to get involved, then say to yourself, listen, hey, I'm going to get involved. This is my allocated risk capital for election trading. I'm happy to risk this, understanding, the leverage and all the other stuff, the risk comes in trading. And fine, I'm going to see what I can do with that. I think that's not a bad way of approaching it. And why would you do it differently to normal, whereas you might say per trade risk, per week risk, per month risk, etc., and a sort of circuit breaker loss limit on your equity curve? I think the election offers a very unique opportunity, and that there's lots of opportunities coming. So if you're trying to think, oh, should I trade this? Should I do that? I'm going to risk this. I think personally, again, up to you, your money, you take your own decisions, but having a kind of risk capital allowance that you'll say, right, this is my election pot, if you like. I'm prepared to risk this because I think on the right opportunities I can do well. But if not, that I'm fine with that. And that's a better way of going in than kind of blindly. And if you ignore any of this other stuff and you just go in there and you want to trade elections, I think that's a very, very good rule of thumb to consider. Okay, so the summary for you. I think there's potential opportunity to react quickly to news and results. If you're a short-term trader, if you're a scalper, this is your heaven. This is your heaven because stuff is going to be there's going to be plentiful opportunities if you're good with your discipline and you can shut trades down early that aren't working, and you can be smart and you can watch momentum ignition and you can be very and you're good at that, then this is perfect for you. There's opportunity there. There's also the reprice trade. So if we have started to see something coming in and start some of these assets I mentioned before repricing, otherwise money flowing into them because there's more certainty of the result, then I think there's a trade there, a trend trade there, a pullback trade, some support trade as we saw in some of those examples. Then certainty trade, don't know what's going to happen. Is that weak for stuff or the unexpected response trade? So real certainty, but the unexpected response trade. There's all these different. It sounds more complicated than it is because we think, oh, this, that, and the other. And especially when you start to narrow down your field of vision, you can start to formulate a very simple A4 plan and go, this is kind of how I'm going to look, but price is king. I'm not going to do anything unless price tells me what to do. And you just be smart, keep the risk managed. There will be tales of people who, don't keep the risk managed and unfortunately the volatility will get the better of them. Don't be that guy or girl. Be smart about it. Allocate your risk capital, decide to trade or not. It's your personal decision. And even after the event, the beautiful thing now is there's opportunities from now until the end of the year, and even after the next year, there's going to be so many opportunities. You don't need that many opportunities. As traders, we just have to pick the opportunity with the highest probability of success, the best risk reward ratio, the highest, EV, positive EV, good EV, whatever you want to put it, expected value of the trade, and trade that way. And so we don't have to be going crazy, but just play to your strengths or watch your weaknesses. And yeah, we'll see what happens, guys. It's going to be fun. It's going to be fun to watch. If you're trading it, it's going to be a plentiful opportunity. But if it's for you, great. If it's not, it's not. More coverage. I'm going to do more coverage. Some rubbish cable channel. Daily emails going out, kind of covering more detail about some stuff running up to it. And as I say, a week today, I'm going to do a webinar where we kind of last look at charts. I'll share my screen. We'll look at some charts. We'll look at what's going on. See some of the positions, maybe some of the levels. Have some of your ideas as well. If you've got stuff you want to look at, we'll kind of do a bit more of an interactive one on the night of the election. I will think I'll probably try and sleep in actually on that Tuesday. And so I've got some stamina to make sure that I'm able to capitalize on the stuff that's going to happen throughout the night. All right, so let's take your questions, ladies and gents. A little bit different this evening, I know. Hopefully you find it valuable. Rowie says, always good to be here. Good to have you here, Rowie, as always. Can't wait for the election next month. I wonder how many American citizens we've got here. Probably not many because Pepperstone clients. Dorian says in April we sent an email about actually possible Fed won't cut this year inflation stalls. You were trading the 1 minute structure. I don't know if that was my email, Dorian. It might have been. It's probably Pepperstone email. If Pepperstone said this, possible Fed won't cut this year if inflation stalls. So that was a Pepperstone email, probably coming from Chris or Mike. But your question was, would you be doing that this election too, trading 1 minute structure? Let me answer that question. I'll kind of rephrase. That is not quite what you asked, but I don't. I think the 1 minute is going to be so noisy in this election. If you're day trading 15, 5, that's it. That's probably all you need. I think because of the spreads, because of the choppiness, because of the algo party, because of the stuff that's going on, your after hours as well, liquidity is going to be low. It'll be higher than normal after hours, don't get me wrong, but I think 1 minute might be a little bit too noisy. And the structure thing that you say, I think you've got to be smart, man. I think that levels breaking doesn't really mean much on a 1 minute because it just takes someone to sell 500 lots or something and that breaks because it's after hours and it's algo's playing. So, kind of want to see levels holding for a decent period of time, testing, volume coming through, flow coming through before I'd consider a level broken. That's kind of how I'm going to look at it. Election, I'm going to be like, right, just wait, Mark, just wait. Don't dive into this. You need to see like the money properly flowing in. And if you're a price action trader, if you do trade supply demand, you know when you see that flow, the flow's coming, right? You might not get the return. You see the flow, you see the stall, you see it starts coming again. Now there's your trigger. And it's just being a little bit clever about just recognizing there's a hell of a lot of noise, man. It's the most noisy time to trade possible. Big reprice. How do you define that? Large 1 minute candles, large 5 minute candles, large 15. How do I prevent myself from chasing these reprices but properly positioning? Dorian, reprice for me is much longer than that. That's like multiple hours. So, a reprice for me is okay, let's imagine we have something that's considered bullish for an asset, because we could pick anything, and I see that hours, hours, hours. That's continually driving, 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 driving. That's the reprice, because that's allowing people to work their orders. It's allowing money to start flowing in. And my assumption then, unless things change, which they do in elections, obviously, is that that's going to continue, and I want to position for that. And so reprice for me is persistency of trend over multiple hours. Reprice is not large 1 minute candles. That's just people reacting, and it could be could be nothing, right? Someone can move the market massively in 15 minutes and can be smidgen of the real truth behind behind what people are thinking. So yeah, to me, it's multiple hours of move is a reprice. And how do you prevent yourself from chasing these reprices but properly positioning? Don't chase. Give yourself a rule. This is, I'm not going to chase. If you are seduced by momentum, you're seduced by those big spikes. Make yourself a rule now that says, I will not trade those big spikes. I will wait until I see a good trend, and it's going to be way higher. Let's imagine if you're in the bullish scenario than you like. But if you know it's there and then it starts to curl back, starts to find some support, that's a much safer, clearer trade and structured trade to take, I believe, than kind of jumping on that trend, because you've seen the trend, you've seen the positivity, you've seen the response to that, which is a hold. You can be calm, you can calculate how you're going to position the trade, get ready for the trade. And then kind of doing that rather than chasing every single thing, because honestly, during the election, you will have these 15-minute spikes swinging off, and you'll think, it's going to rip. It'll swing right back. You just if you are someone who chases stuff, just wait. There's so much opportunity. You don't have to dive in. You can wait until the next day. Just really, really, really consider how you're going to operate, and consider your weaknesses as well. Something that volatility, fast markets, that type of stuff will always, always find a chink in the armor if your discipline is not on point. And I'm not saying it's you, Dorian, but if your discipline is not quite there, then absolutely don't trade this. Rather see you live to fight another day. I'd rather see you preserve your capital. And as I say, there's going to be plenty of opportunities. Maybe you wait for a couple of days, you let the dust settle, you see what the strength is and stuff, and then you buy the first pullback on dollar or an index or whatever it might be, and that might be the clearest, easiest, cleanest trade for you and the least risk. It's just being smart about how you allocate stuff. All right, guys, ladies and gentlemen, let's call it leaving there. Norman said, nice call, thank you sir, appreciate that. Nuno said, like the advice, grab a beer, watch the noise, and then pounce. Yeah, but pounce later on when the beer's worn off. Nuno, don't be drinking and trading, man. Don't be doing that. But yeah. All right, guys. Appreciate your time. Thank you. I'm back again next week for another one. Take care. Bye bye.